Hello everyone. Today we will discuss about the listing of securities. In this video, we will study the concept of listing, what are the different objectives, what are the listing requirements, what are the different documents required for listing, what is the procedure of listing and the advantage and disadvantage of listing. So let's start with the introduction. Basically, the admission of security of a company to trading on a stock exchange is called listing. In other words, we can say registration of the company shares with the stock exchange. Act of inclusion of securities in the official list of the stock exchange for the purpose of trading is called listing. Listing is not compulsory under the Companies Act. The company issuing the securities for public subscription first has to apply to any recognized stock exchange to get its securities listed. If they grant the permission, then your securities are said to be listed. Listed companies are obliged to pay listing fee and to fulfill exchange disclosure requirements such as providing timely information to its shareholders about the companies, about the activities, what are going to be held in present or in the future. There are different objectives behind listing of securities. To provide ready marketability and liquidity of a company's securities, free negotiability to the stock, to protect the shareholder and investors' interest. It is the best mechanism for control and supervision over the trading of securities. Stocks which are not listed on a reputed stock exchange can also be traded in an over-the-counter market, but such shares would not be held high in esteem in that stock exchange market. So, we will look after the listing requirements. If minimum issued capital of company is rupees 3 crore, then out of that rupees 1.80 crores in face value should be offered to the public. At least 10 and 20 public shareholders for every 1 lakh fresh issue of the capital and offer for sale of the existing capital. Companies whose paid up value is rupees 10 crore or more can get their share listed on more than one stock exchange. In case of access application, interest is paid if delayed beyond 10 weeks from the closure of the subscription list. Means they have to pay the interest if they delay their payment beyond 10 weeks. At least 25% securities are offered through advertisement in the newspaper for a period of not less than 2 days. Company can't advertise anything like thank you, oversubscribed or anything else so that it will detract the investors. So you don't have to stimulate the investor, you don't have to give the thanks or you don't have to write the subscription oversubscribed etc. when the subscription is open. This is not legal. Now we will study the listing procedure. So first of all, if you want to get registered in any stock exchange, then the promoter should first decide on the stock exchange or the exchange where they want the shares to be listed. Then they should contact the authorities to the respective stock exchange where they propose to list. After that, they will discuss with the stock exchange authorities that about the requirements and eligibility for the listing. Then you have to submit the application for the listing along with the supporting documents like article of association, memorandum, prospectus. They should be submitted along with the application. Next, The company will finalize the memorandum article and the prospectus. Securities are issued and allotted. And now the company will enter into the listing agreement by paying the prescribed annual fee and submitting the necessary documents and particulars. Company who want to trade in the secondary market have to keep 1% deposit of the issue amount as a security with the stock exchange. Now your shares are available for trading. So this is the procedure of listing your share in any stock exchange. Now we will look after the different documents that need to be submitted to apply for listing. First of all, copies of memorandum and article of association, prospectus, all the agreement that you made with the underwriter, specimen copies of the certificates and letter of allotment, detail of bonus and dividend declared during the last 10 years, particulars of the shares or debentures for which permission is sought, statement showing the distribution of share, brief history of the company's activity since its incorporation with reference to its assets, liabilities and capital structure. And after a careful examination of the application and supporting documents, the Stock Exchange Authority may call upon the company to execute the listing agreement. So, all these documents need to be submitted along with the application form. There are certain advantage and disadvantage. The advantages are as follow. It ensures the liquidity. It gives wide publicity and marketability to the securities. It helps in enhancing the reputation of the concern. It also protects the investor interest through the enforcement of set of rules and regulations of the SEBI. Provide best practices and prices for the securities, facilitates the correct evaluation of the securities, and periodic reports are submitted by the companies to the stock exchange. This will help in creating the transparency, and we will be able to know the financial strength of that particular company. There are certain disadvantages. Freedom and secrecy of the activity is not there. Victim to erratic fluctuation in the values means the share values are very fluctuating. So you can be the victim of that fluctuation. Gambling and speculation are commonly did activities in the stock exchange. If you want to become broker or sub-broker, then minimum 21 years of age is required, and you should neither be bankrupt or nor convicted any offense. You should be 10th, 12th pass and should not be engaged in any other business. So, this is the eligibility for the brokers and sub-brokers. Now, at last, we will study how the issue are priced. Companies are free to decide the pricing. Companies consult with the merchant bankers for deciding the price of the issues. The fair value of shares are determined by three methods. First, net asset value means it is the sum of the equity, reserve, surplus and contingent liabilities. Second approach, profit earning approach. It is based on the average of the profit after tax for 5 years. Third, market value. Average of the market value in the preceding 3 years. So these are the three important methods of pricing any issue. I hope you all are able to understand now what is listing and what is the procedure of listing. If you have any query, you can comment me in the comment box. Like, share and subscribe my channel. Thank you so much.